Hey, good afternoon, guys. We're going to go over our Forex trades for today, Friday, January 23rd. Finally got a couple of trades off. We had to avoid, or we didn't have to, but we chose to avoid the announcement by Mario Draghi and the ECB on over in Europe on not only just their interest rates, which we all knew they weren't going to do anything, but on their QE. And they did institute a QE pretty much to the size that the market expected, but it created enormous volatility. So as you know from past, we don't trade those announcements. So we'd let them go. We let the market digest it for a few hours and a couple hours, whatever, and then we look to put some positions on. Just to touch base real quick on their announcement, they're going to the tune of about 60 billion a month for the next 2 years. It'll be ending in 2016, but it can be extended or do a QE2, whatever you want to call it, if conditions warrant what they said. But what they're also going to do is they're going to spread out the purchasing along the Euro central key, meaning the different weights that each country carries within the makeup of the euro. I think there's now 19 countries in the euro. They're going to buy the bonds equivalent to that weighting. So, I don't know, or I think Germany's the heaviest weighted at maybe 23% or something. So, 23% of the assets will go to Germany. But what the street, I think what happened was, what the street didn't like so much was that they're also taking the risk of these bonds, and the ECB is not taking any of the risk for the most part. The ECB is, and when I say the ECB, I mean the Eurozone is what I mean. So each country's central bank is responsible for their risk of their bonds. So as an example, within the euro, if the ECB buys X amount of Greek bonds, as an example, or X amount of Spain bonds. Let's use Spain. They buy X amount of Spain bonds, and Spain was to go bust and can't pay those bonds. Spain's responsible for it. The other countries within the Eurozone will not help Spain out, even though the ECB it basically runs the euro. They're not shifting any of the risk on to other countries to help Spain. So Spain's basically on their own in that example. I don't think the street particularly liked it, and our take on it is that, and from all the research we did, is that Germany and Angela Merkel from Germany, they didn't want to do ECB right from the beginning. And I remember reading this months and months and months ago when the ECB started floating around the QE. They didn't want the ECB to do any QE at all. So we feel Germany was basically, they carry so much weight with the ECB and the Eurozone that they said, okay, we'll be on board with QE, but to our terms. And I think their terms were the risk does not get spread amongst all the countries in the Eurozone. That the spread is each country is responsible for their own risk. And I think that's really the only way the ECB could get QE have all the countries on board with QE. That's what we feel. I mean, we could be dead wrong, but we have a good feeling on it. And obviously from the reaction you've seen on the euro, before the announcement, euro US dollar was, I think it was trading around 1.15 or so. Today it broke 1.12, so it was actually trading down to 1.11 and change. Down about 400 pips from the announcement. So just absolutely incredible move on anything euro based. So that was one of the reasons why we were staying away, at least any time right heading up to the QE for about 24 hours, and then after the QE announcement for a few hours. But we did have two trades, like I said earlier when I first started the video. Picked up 13.7 pips One was a full scale scalp, and one was a about 15% of our normal position. So we'll go over them here real quick. First trade here is euro to yen. This was a full-fledged scalp trade last evening from our indicator. So anyone following along, you know, it was a really easy trade. It was consolidating. The indicator was coming down, and as soon as we got the signal to go long, it was a no-brainer. Again, with a full size position, a full scalp, you know, you're looking for 3, 4, 5, 6, 8 pips, whatever, 10 pips, anything really, really quick. We grabbed it for a quick 7.2 pips. Grabbed it we went long 134.850. Sold at 134.922. Picked up the 7.2, which is full size, and you can see there it ran right to the figure. When you look back at it, you know, we look back and we said, man, we should have held out to see if it ran up to the figure. You know, again, it's a quick scalp, so this was a matter of a few minutes later after we got out. You know, she ran all the way up to the figure. So, but those things happen with scalps, and that's what they're designed for. You're not really worried about the overall trend and playing it with the trend. Obviously, on the 30-minute chart here, you see the trend is down, or at least it was pretty much down. You know, if you're looking at it from this point on, from where we went long, so you're really not concerned so much with the trend. Again, it's just a quick scalp, so whatever you can grab. And on the flip side, you're only going to risk so much, you know, 20 pips or something like that, 30 pips. So, you know, you may take a few profitable trades if you take one big loss, but that's okay, because the odds are you're going to have a few of these trades. And then you're going to have the days where you have a few of these trades and you don't take the loss at all. So that was a really positive trade. And then the second trade was pound to yen. This was a signal that went out probably 12 hours prior to getting the position off. It actually got filled overnight, late, or I should say early this morning, probably around 5 o'clock or so, 5:30. We were short this 176.777. We came in the office. We see the positions on. You know, you're looking at 777, right? Lucky numbers here. So it was just coming our way, and all of a sudden it started to jam down. Our first target zone was right around the figure of 176 even. It didn't quite get there. I think it traded down to 176.12, 176.13. We did get out maybe a little early. We got out at 176.341, picked up 43.6 pips. We had about 15% of our normal size, as mentioned earlier, so that's equivalent to right around that 6.5 pips. So, you know, we'll take it. You know, could have grabbed more out of it. But we weren't going to mess around. It's a Friday. We want to be flat. We want to be cash going into this weekend, especially this weekend, because you have the Greek elections coming up, I believe Sunday or Saturday night. So we don't want to be holding anything. Normally, since this position was so small, you know, we would either do what we did here or try and piece out of it, or hold the position. You know, so we would have been a last-minute call heading into a normal weekend. But with this weekend, having the Greek elections, we weren't going to mess around. So we're going to go into cash and move on and get ready for Sunday night here in the States. By that time, I would think the election results will be in from Greece, and we should be able to free to trade. So we'll see what happens on Sunday. Anyway, that's it. Have a great weekend. If you're still trading now, good luck. Probably won't get any signals the rest of the day. It's only a few hours left. So that's it. We'll wrap it up. So like I said, have a great weekend, and we'll be back Monday, assuming we get some action.